Welcome everybody. George Veter, the president of Veter Financial Group. Again, just a little chat here the weekend after Thanksgiving. We had hopefully a wonderful holiday. I know my family and I had a wonderful holiday, and hopefully all of you did as well. But also had kind of some excitement in the market on Black Friday, the big retail day, the day after Thanksgiving. And as many of you know, if you turn on the TV or listen to the news, the market had a big drop. I know the big headline was it was the worst drop of this year. It was like about a 900-point drop in the Dow. And it was the market's reaction to the headline that a new variant for COVID-19 surfaced in South Africa and then spotted around different parts in Europe. And so that created some more fear in the market that would undo the economic momentum we have recovering from the original COVID-19 and the variants that have showed up so far. First of all, by way of explanation, Friday was just a partial trading day because it was the day after a holiday and a travel day, so we didn't have a full day of trading. So we had very low volume. So the normal amount of trades was reduced by more than half on Friday. Now, whenever you have thin volume, the market has a tendency to be more volatile. I relate that, or I can use a metaphor like the freeway. If there are half the cars that are normally on the freeway, I can go faster. And that's kind of the way the market is. The market tends to move faster and be more volatile on thin volume. It's not like it is when we have a heavy trading day. And whatever move is made is seen by analysts as less significant on thin volume days. Another thing that I might add my perspective to is just the way the market reacts now and will be reacting in the near term to COVID news. That obviously caused a recession a year and a half ago, and we are dealing with the results of that recession and a recovery from that recession, which in a lot of ends is good, in some areas is still difficult. But the market is taking a while to adjust to this new world, this post-COVID world that we're all living in now. We all remember 9/11, 2001, and how devastating that was when we had the Twin Towers go down. Now, when that happened, of course, it also triggered a recession and a huge hit economically. Now, in that period of time, we were hyper conscious of security issues because terrorism, that was the first time that it had a big impact on the United States. Prior to 9/11, we pretty much thought, from my perspective, that terrorism was something that other countries deal with. But all of a sudden 9/11 came and the United States had terrorism front and center. We had threats that we had to be concerned about. We had to create new protocols of how to safely live and navigate that world. So that became kind of the market's obsession, and every time there was something to be concerned about or something made the front line, the market would react to that. But after a while, the market got used to this new world we live in post 9/11, that we all have protocols that not just TSA, but the way the world views security is always going to be different after 9/11. And pretty soon, the market stopped reacting to terrorism threats. I think that's very similar to what we're experiencing with this COVID world. This is the first time in our lifetimes, our being this viewing audience and myself, that we've had a big national health alert. We've heard about, what happened when we had the Spanish flu and different periods of time where we had epidemic health crises, but this is the first time in our lives. So it's become it is serious, obviously, and I think everybody has been touched by COVID. Maybe not you personally, but someone in your family or in your circle or someone you know of that has passed away or has really had detrimental issues related to COVID. So I'm not minimizing it, but it is a reality in our world and probably here in some form to stay. We are getting better at treating it, and we will continue scientifically to deal with COVID, to make the world more livable in the presence of COVID and threats like COVID, but the market's initial big reaction to it will soften as it becomes more accustomed to living in this world with protocols to protect us from COVID and this variant that just came out over the weekend and then new variants that'll come out. Bottom line is, that shouldn't unwind our long-term view of investing in free markets and the benefits of innovation and growth in all the different sectors that we have our money invested in to do well over time and accomplish our goals. So just letting you know that when these things happen, we wake up and the world's scared about something. I know it affects me like it affects everybody, but I do have the benefit of perspective and a lot of history in this business and all kinds of different market cycles in my back pocket and in my memory since I've been a professional here. And I do take it in stride, and it doesn't make me want to change the game in the way that I approach investing. So if anything, those are opportunities to look for where we can actually make money with short dislocations in the market, and we'll be searching for those in your behalf. Anyway, just want to let you know as we head towards Christmas, as we have Thanksgiving right behind us, that I want you to focus on your health and focus on your family relationships and focus on the kind of spirit of good cheer that accompanies Christmas periodically, and get the most out of the emotional benefits of this time of the year, and don't worry about market disruptions. We will worry about those for you. Anyway, God bless you. Just wanted you to know my thoughts, and hope you enjoy the balance of this holiday season.